Asset allocation. Think of it as your personal investing recipe, or the blueprint for your portfolio. Your asset allocation basically refers to the mix of investments you select to help you pursue your financial goals. You generally have three asset classes to choose from: stocks, bonds, and cash. Cash generally does not offer a lot of growth, but if you anticipate needing access to funds, say for a major purchase or emergencies, you'll want a certain portion of your portfolio in cash, or what's called cash alternatives, such as CDs or money market funds. Stocks have the highest potential for longer-term growth. Think years or even decades, but they can experience sharp price swings, especially in the short term. If you aren't comfortable with a lot of risk, you could consider owning a smaller slice of them in your portfolio. But remember, stocks are still important if your goal is to pursue long-term growth. Bonds typically don't offer as much growth potential as stocks, but can offer you regular income payments, as well as provide an important source of portfolio diversification. And if you don't need the income today, you can reinvest it for added growth potential over time. Here's how they work together. Imagine your portfolio as a pie, cut into three different size slices. Because each asset class comes with a different level of risk, as well as certain other characteristics, by selecting the percent of each you want to own, you can design a portfolio that matches your goals, risk tolerance, time horizon, and your liquidity or cash needs. Keep in mind, a well-balanced portfolio contains a mix of all three asset classes. Because stocks, bonds, and cash respond differently in different market conditions, having a certain percentage of each in your portfolio provides important diversification and can help to limit losses in down markets. One more note, your asset allocation is not a set it and forget it thing. As your goals and life situation change, your mixture of stocks, bonds, and cash will likely need to change as well. Consider revisiting your asset allocation at least once a year. And there you have it, asset allocation. Thanks for watching, and stay tuned for more Translation Please videos.